Welcome back to the channel. I'm Foreman, and in today's video I'm going to be talking about the UK stocks that I'm buying right now. And if you like the video, please drop one of these to help support beat that YouTube algorithm. I am aware it's very dark. I'm experimenting a bit with lighting, with plans to perhaps get a second light set up so it looks a little bit better. So do appreciate if it is a bit dark today. I will know when I'm editing the video and should resolve it. So without further ado, according to Google Finance, the FTSE 100 is down 1.69%, the FTSE 250 is down 0.28%, and the S&P 500 is pretty much flat, and it's only changed 0.037%, which is effectively pretty negligible. I wanted to give a quick update on my spreadsheet. So as you may know, I've been creating a new spreadsheet that I'm going to base out and then have all my transactions, have all my performance, and then have just a general overview. And at the moment, it's looking okay. Admittedly, I've not made too much progress. It's mainly cosmetic progress, but there is something really starting to come together. Before I had it so that every single holding was visible or not, and now I've got it so that, you know what, if it's blank, it's blank. And it's quite cool because what I can do at the moment is if I go, yeah, actually I'm interested in seeing my transactions for Redrow, I can see that in my time I held 1,000 shares. That was the average cost, and that's the current price. Effectively, if I'd have carried on holding my shares of Redrow, I would have returns of 69.25%. However, this could be somewhat inaccurate. Maybe I did not hold this many shares at one particular time, and perhaps I held 500 shares, then sold 500 shares. So I'm still trying to really work out how to balance things out like that, but there is certainly room. For instance, if I look at a company I did hold, Decra Pharmaceuticals, it will say I own 2 shares, so I've got to half it really, and that's how much I have, although the percentage returns are completely off because the average cost, I must have sold at a loss, and hence why it's flipped all of that off. But it's an interesting spreadsheet, and there's certainly potential here for the future, but at the moment, still in development. My biggest holding in the portfolio, Boohoo, has had a little bit of news this week. Nothing major, but quite a bit of volatility. Shares are down 4.40%, which is pretty substantial, although we need to remember that this is an AIM listed stock, and those stocks are typically very volatile in general. They've had 1,400 employees of their company sign up to their Say or Save As You Earn scheme. I really don't like how all the adverts are now just cluttered my screen. But yeah, the idea here is that, yeah, there is going to be a minor dilution. I think I calculated it was something like 0.48%. Yes, that will likely impact your holding. However, we need to remember that these shares are locked up. These shares are, I believe, on option until 2025. This is being given to employees that subscribe to this. If you aren't aware of what a SYAE or Save As You Earn scheme is, effectively they're putting money aside to purchase or acquire shares. I think in the particular case of SAYE, they are given a price at the start, which I believe is £1.54.48. And then they've also got like roughly a discount on the current price, and then in 5 years' time, I believe that they are able to then claim or whatever they save in this scheme, and then they're able to purchase these shares at that respective price, which is effectively a form of free money. So if your employer offers a SYAE scheme, definitely jump on it, because quite frankly, even if shares were flat this whole time, they're saving money aside. This is already a 20% discount. They're going to make a 20% markup. What a fantastic price. If I was an employee of Boohoo, I'd be very much happy with that and maxing that out. And I think this is good for the longer term. These employees are likely going to want to stick with the company. If they leave, sure, they're going to sell the shares, but I'm guessing the majority of them are going to stick where they're comfortable, and that's always a good thing. You've got less holders that are there willing to trade on the volatility, and more that are committed for the longer term. Although I know from my experiences in these sort of schemes that, yeah, employees usually do exercise these rather and sell them at the end of the contract period instead of actually continuing to hold in a brokerage. Although I know someone that is an employee of Argo, and they've managed to save as you earn over the last few years, and they've got quite a fantastic little pot in their brokerage. I've bought an additional 129 shares of Boohoo. I now hold 5,675 shares. If you were keen-eyed, you would have noticed that on the spreadsheet that is different. There's an error there somewhere. I do need to fix that. And my average price is £2.34.32, which I think is a good price. My target price for the average was £2.25. For the longer term, I think that'd be a fantastic position, but then I'm only really hoping. I didn't expect shares to be down this price for this long, and so long as they are, I'm going to keep accumulating more and more. Hence why my attention is primarily on Boohoo. Games Workshop might be an interesting one as well, because yes, that is my highest conviction stock, although at the moment there is certainly some concerns about the community, and Furthermore, there's more. There's an article by PC Gamer here, and I understand if some of you weren't into video games or really follow this, but Warhammer has had an incident at one of their tournaments, I believe it was in Spain, where there was about 800 people. They've had to release a statement saying, hey, look, this is not what we're about. I believe actually they said the Imperium is driven by hate, Warhammer is not. Obviously, there are certain words here that I'm guessing I cannot say on YouTube, so I need to be very, very careful. Effectively, a person in this place pretty much participated in an 800-player tournament, and they were referencing a certain notable person from 1940s Germany, and they were covered in symbols. I'm sure you can understand or you can read, and yeah, that's probably not setting a good example. I don't really have an opinion on this. I think obviously if there is a form of hate in the player base, then you do need to be very careful, and this is something that Games Workshop really need to keep an eye on, because I know in the past they've changed the names of some of their, or at least World of Warcraft had done this, where I believe they had the ogres, goblins sort of race, they called them greenskins, and I think it was meant to be sort of a joke to kind of go, hey look, you know what, that's greenskins, like, clearly it's so far different to what we are, and so this is like, we're going to show you how silly racism is. And I think they've had to change that, probably because of Games Workshop as well, because they also do have greenskins, but they've effectively changed it probably to reduce the idea of that kind of hate, I suppose, or oppression in a way. It's a bit out of my depth, honestly. I'm going to move on, but this is something that I do need to keep in mind, because there is discontent amongst the fan base of this hobby, and obviously if we're getting both hate symbols, we're seeing a lot of aggression against the company in particular. This may not be a unique event, and we may see more to come. Hence why, even though the shares are down a fair amount, I'm close to my average price. I'm not buying any more at the moment. Yeah, behind the scenes they did announce that they were paying a new dividend this week, and I believe it was of 35 pence, and that this for 2020-2021 that was 80 pence last year, and it's now £1 this year. However, the frequency of Games Workshop's dividends are often very different, and I think comparing it to this metric alone doesn't mean they're outperforming by any means. Although a lot of people have taken it as that they're going, well, they're paying a dividend out of truly surplus cash, and they're paying this much so far. This is a good thing, right? And it possibly could be. It could be a hint of what's going on behind the scenes, and actually a very positive sign, but certainly one just to keep an eye and be careful. I'm bullish overall on the company, but I do want to see what they can do to really improve. I am reading their annual report at the moment. I'm about halfway through it. There are a few interesting things that they've had no product recalls in the past year, according to the annual report, at least when that was dated, which makes sense really, because they probably don't do too many product launches. But then we've also, I didn't really know this, but they don't have any research activities. I mean, it makes sense, right? When they are just developing their own products, they're vertically integrated. They likely don't really need any research activities, but yeah, they're going to spend a lot of money on development, better equipment, and the likes. But it's not something that you may not have immediately thought of. Another highlight as to reading the annual report. Links to the videos at the top right. And if you'd like to sign up to my stockbroker, you can actually get a free share of up to £200 when you deposit just £1 using my link in the description down below. So go check out Freetrade, link in the description down below. Argo Blockchain has had a fair bit of news this week. We've had the director dealings, we've had Peter Wall, obviously the CEO of the company, and we've also had a guy called Alex, or actually, I don't know if that is a guy. I've just realised Alex is quite a neutral name in that regard. But we've got a person called Alex Go, and effectively they've bought a fair amount of shares. What is particularly interesting is that this Alex person has bought 40,000 ordinary shares. They've not purchased the NASDAQ listing requirements, and they've paid roughly £1.32 per share. And this person is closely associated with Sarah, a director of the company. And the CEO himself has bought the equivalent of 71,000 ordinary shares at roughly $19.132. This is a fair amount, where I believe they're now holding of ordinary shares, or at least Peter Wall is 1.1 million, which I think the total share pool of Argo Blockchain from memory is roughly around 350 million. So that is certainly some stake, but really not much overall. And considering there is a lot of fear in particular about this company and potential dilution, you would want the directors to really be wanting to exercise options, really hold a bigger stake in the company so that they've got significant skin in the game. And it's likely why Argo Blockchain shares have been held down for the last 6 or so months, because there's a lot of fear. What are they going to do? They need capital. They said it's going to take $1.5 to $2 billion to fully kit out the Helios facility in Texas. So there is some large concerns there. And obviously, Only recently have we started to become more comfortable with it, but shares are down 3.74%. But the volatility this week was pretty phenomenal. And we can see the closure of the 8.7% or 8.75% senior notes that are due in 2026. They managed to raise in net proceeds $38.6 million, which, you know what, more capital, not a dilution. It's a good sign, but they are obviously going to be building more debt. So perhaps the quality of this company over the longer term may be a risk, although they are in an early growth stage. And if this is due in 5 years' time, perhaps then this is reasonable. I do think these kind of companies need to stop focusing primarily on HODL and look to really be taking profits on their Bitcoin holding so they can then use that money to reinvest back into the business instead of just going immediately for a HODL. Do they think that the compounding rate of Bitcoin, the asset itself, is going to be faster than the rate that they can grow the business? I'm not too sure, because quite frankly, I do believe, and I keep saying quite frankly a lot, I do believe that the business can grow faster than the likes of the cryptocurrency. You have a lot of bulls on Twitter, for instance, and they're really interested in Bitcoin. I think it's going to do well. They're like, well, between this period and this period, the shares went up 3,000%. Then the most recent one, they went up 300%. I'm going to do an average of both of them, and it's going to be like 1,000%. I'm just like, that's not really how it works, but you know, you keep doing you. It's just that in particular. So as you can tell, I'm not as bullish on Bitcoin in the longer term. I don't think it's going anywhere. I think that I can see the use case for obviously the developing nations, and so it makes sense as to why it may be used. And obviously the technology there is certainly a good piece. It's a real case of what will we be using, and I don't think the governments in particular are really going to allow countries to fully rely on these for transactions, at least not the countries that have their own currencies. So for instance, England or the UK have their own currency. We've also got the likes of America having the dollar. When you have your own currency, you have control. And it's likely why the UK are looking to create a Brit coin, and it's likely what will happen in the longer term future. Dunlop Group is one in my dividend portfolio, or my SIP, which only roughly equivalates to £200 overall. I am going to be transferring in a pension, which is going to be around £800 just to transfer into the SIP, and then I've got something building up as I've changed pension plans with my employer. So that will be a little bit big of a boost, and I'll be looking to buy more stocks, as after all, I was saying I was looking for a diversified portfolio. Although now that my new rule is I need to read annual reports, I'm being a bit more quiet on this stage. I'm going to be reading a lot more. I've just gotten a little bit behind on it because obviously life comes along and distracts you where possible. However, for Dunlop Group, this is particularly interesting because they've announced that they intend to commence a new share buyback program. I like this. When a company is making excess cash, buying back their own shares still gives them value because they have access to this in the future. Although there is a limit on how many they're allowed to buy back, I do think this is a better scheme than the likes of dividends, but it really depends on what the company can do. If they can reinvest the entirety of their capital back into the business and see phenomenal growth rates, then realistically, I'm not going to want them to be paying a dividend or doing much share buybacks. But, for instance, in a bigger company where they've got less growth potential, they're more mature, I'd prefer them to be doing buybacks overall, because the buybacks reduce the overall shares in the pool, and when you reduce that, there's a greater demand for the lower amount of shares, and it's going to somewhat increase the price respective of how much they do it. Effectively, it's the opposite of a share dilution. The maximum number of shares that may be purchased under the program will be 2.5 million ordinary shares, which, if I'd have calculated that, I'm guessing is something like 40 million pounds. At a guess, I'm actually not too sure because I should have researched this before the video, and that they say that the aggregate purchase price of all these shares acquired under the program will be no greater than 40 million. So actually, yeah, I may be correct in that statement. Good sign. It's a company making lots of money. They're reinvesting. They're buying a few stores here and there. They've got long-term growth potential. The CEO, I believe, Nick Wilkinson, very, very intelligent person, started on a street stand, and so there is definitely room for growth for this company, but obviously it's not going to be fast. It's not going to be as exciting as my core holdings in the growth portfolio. And we've also had LSEG, a company I used to hold that I bought again. It's actually down, and I believe it's down by 3.75% this week. Typically, that's no bother to me. It's a small position. I only hold one share, and it will be interesting to see what's really going on behind the scenes. From what I've seen, it might be a resurgence of Refinitiv, how they may not think this will integrate. But then if you look forward 5 years, you might go, oh, what were we thinking at that time? Now is the time to buy. So there is certainly something to keep in mind here. And I think where there's a bear case, really look into it and really dive in, because you may find that with the knowledge that you've done through your research, that actually a majority of people are wrong and that you are right to keep buying. For instance, I get lots of criticism on actually purchasing shares of Boohoo. People are like, look, I think your Boohoo holding is too big. And I'm not concerned in the slightest. I've spoken to a few people like investment analysts that I've met in person, and they're like, whoa, hold on, like you have your unique selling point, but you're going like very risky. And I don't see it as risk personally, because it's my own capital. I'm not managing it for other people. And yes, there is always a risk, but I don't see the risk as great as being invested in an index fund. Sure, one of my shares could suddenly go bankrupt. However, I deem that highly unlikely based on the health of their balance sheets and their forward growth potential. I'm looking at the forward visions of the future and where I think things will be, which is a very hard thing to predict. And I think these will still be companies that are still chugging along. I have also got some changes coming to the channel in which I'm planning to do a live stream. I don't know how frequent this will be. It might be weekly, it might be fortnightly, but I certainly want to add this to the channel. And then the idea is that I do this live stream. We'll do like an hour, 2 hours, maybe, depending on how well it's going. I'll have 6 core questions or something just to go through and chat about, where you guys can reach out to me in the community. And then I can clip these videos and then post them again as another upload on the channel. So I'm hopefully looking to double the overall content on the channel. Obviously, if you would be a keen viewer of these live streams, and you would already seen some of these clips, but then I think there's more value overall. And in these live streams, I want to cover a broader perspective. I think there's a lot of business stuff I can talk about, also the likes of investing and more personal finance. Personal finance contents, I feel, for the channel, a lot of you watching this are quite experienced in investing, at the very least, where you know what's going on. You're watching these videos because you have an edge effectively on the markets. I'm not saying, oh, because you watch me, you're all great. But I think in general, you are ahead of the general public. And so you're not going to be looking for the really basic questions like what is dividend yield in particular. There will be a few of you, and I've had these questions before. But I think these personal finance videos, or basic investing videos perhaps, they distract or aren't a great interest to those of you that are my loyal core audience. And so I'll be just chucking them out as clips, questions that I'll answer on the streams. And then hopefully I can deliver value to each aspect of the community, and overall there's growth for the future of the channel. And if you like this video, check out the card at the top right of the video. Stop losing what my new technique is to research stocks that I want to buy for the longer term future. Thank you for watching. I'm Foreman. Have a fantastic day.